will now be recorded.
So very good evening to all of you present for today's session. Yes, I hope my voice is not breaking. I hope my voice is clear for you.
Ma'am, clear ಆಗಿದೆ ma'am.
Thank you. So I'll just share the screen with all of you. Yes, I've shared the screen. Hope the screen is visible to all of you. Yes, you're able to view the screen. Time value of money.
Yes, ma'am.
Yes, ma'am. So you're going to open the file which we had solved, which were in the halfway. In the sense, we had just finished off the exercises, and today we are just going to start with the debt amortization schedule. So kindly open that debt file after time value of money. So if you're ready, we can start off. Right. So I hope all of you have calculated the EMI for the case 1, for debt 1. Did all of you get 33,000? Yes, equals to. So what formula do we apply here for calculating the EMIs? So what are we going to do here? Equals to?
PMT.
Equals to PMT. So select here PMT. And the rate here is 12%. Okay. So divided by 12, since it is on a monthly basis, comma, number of years is 3 years into 12, comma. So what is the present value? It is 10 lakh. So it is 10 lakh, comma, future value is 0 and type is end of the period, 0. So you should be able to get 33,240. Okay, I hope everybody have got. In case you haven't got it, you can just let me know, or you can just work it off now. Okay, so we'll start with the debt amortization schedule now, with the case which we are having today. Okay, so if you can observe here what kind of a debt amortization schedule it is. See, loan amount is 10 lakh, rate is 12% compounded monthly, and the term is 3 years. So every month an EMI of 33,214 has to be paid. Okay, so here what does this debt amortization schedule mean? Now assume yourself, okay, assume your parent. Now the individual has obtained a loan of rupees 10 lakh, and this loan is repayable within a period of 3 years. I'll repeat it again. A loan of 10 lakh has been obtained, and this loan is repayable in a period of 3 years. And every month, the loan amount has to be paid in the form of EMIs with interest. And this, how you're going to do and how you're going to calculate, is what you're going to see here. Okay, and if it is 3 years, so for how many months in total you're paying the loan? So 3 years equals to how many months? It is 36 months. So for 36, so by 36th month your loan amount should be 0. Any small amount like 15 or 20 rupees, it's fine, it works out, it's a very fractional amount. But apart from that, you should not be able to get a huge amount as your balance. Okay, so by 36th month, the last month of your third year, your loan amount should be 0. Okay, so that's how you're going to complete this debt amortization schedule. Okay, so let's start. Can we begin with the debt amortization schedule? Are all of you ready? Yes?
Yes, ma'am.
To work out with?
Yes, ma'am.
Yes. So let's begin.
Yes, ma'am.
Now, please observe when I'm working on the steps. Don't do along with me simultaneously, only for this stage. Why? Because you observe the first and the second month when I'm doing it. Then I will tell you how to complete this entire table. Because we've also got a similar case study in debt too, which you can work out right away now. Okay? So what I'm telling you is just observe the steps and then you will proceed with the schedule. Okay, so here the first column you're having is the month, first month, second month, so total number of months you're having. So as I've told you, 3 years means 36 months. Okay, now beginning loan amount. So what is the beginning loan amount? What you're supposed to do is equals to, so what is your initial loan amount? It is 10 lakh, equals to 10 lakh. Press enter. Okay, this, so you're going to take the cell reference here, equals to 10 lakh. EMI again equals to, your EMI is this 33,214. Press enter. That's all. Okay, and here interest how you're going to compute. Okay, equals to 10 lakh into 12% divided by 12, because per month you're supposed to pay the interest. So equals to loan amount into 12% by 12. Press enter. So the interest amount is 10,000. Next, what is the principal amount repaid? Before I proceed with the principal amount repaid, here see your EMI is already in the minus figure. Now how do you compute your principal repaid is beginning amount of loan, EMI, interest you have. So principal repaid will be EMI minus interest. So your outstanding loan amount is 10 lakh. Out of 10 lakh, how much is the actual amount of principal you are repaid? Because as you know, what is EMI? EMI is nothing but principal plus interest. Yes. So here your EMI is 33,214 and interest amount is 10,000. So to calculate your principal repaid, you have to subtract the interest paid from your EMIs. EMI minus interest will give you the actual amount of principal amount repaid. So here, if when you're doing this equals to EMI minus interest, already your EMI is in the minus figure. If you see in the brackets, it has come. So again, if you do minus 10,000, it will become plus here. It'll be like minus 33,214 minus 10, minus minus becomes plus. That should not happen. So only for this debt amortization schedule, what you're supposed to do is you have to remove these brackets. It's, it is a minus figure, but for the calculation of your principal repaid, you have to take away these brackets. And how do you do that is go back to your EMI amount of 33,144, just double click on the same. And here, as I've taught you in the previous time value of money exercises, here you can just add that minus to the 10 lakh amount. Just add a minus to the 10 lakh amount and press enter. So what happens? They will go off. So now we can directly calculate EMI minus interest. Okay. So what you're supposed to do is equals to EMI minus interest. Press enter. So which means out of 33,214, your interest amount is 10,000. So core principal amount paid is 23,214. So end loan amount is equals to 10 lakh minus your principal repaid. Press enter. So by the end of the first month, after you pay your first EMI, your balance amount will be 9,76,785.69. Okay. So this is the first month you have worked out. So what about for the second month? Is what you're going to see here. Now for the second
Well,
month, what you're supposed to do? Yes? Did
oh,
anyone
can
ask?
you explain it again, ma'am?
You want me to repeat it again?
Yes, ma'am.
Okay. See here. Now the EMI calculation, I hope it's very clear for you. Now whenever you're doing your EMI calculation, you see equals to PMT 12% divided by 12, comma 3 into 12, comma here you're going to add a minus sign. Minus 10 lakh, then future value is 0 and at the end of the period. Why this minus sign is added here? Because by default EMI is a what do you say, it's a deduction from the gross amount of loan. Yes, so here we have a step where we have to calculate the principal repaid. And how do you compute the principal repaid? EMI minus interest, it becomes your principal repaid. Yes, so your EMI minus interest equals to principal repaid. Now, if we don't add this minus sign, what happens? Minus 30,214 minus interest becomes plus principal repaid. So what we're supposed to do here is when EMI calculation is worked out, just add a minus sign here. That's all. So when you press enter, those brackets will go off. That red working will go off. It will be a normal figure. So now you start with the debt amortization schedule. So your beginning amount of loan is equals to 10 lakh. Take that cell referencing equals to 10 lakh. Press enter. So your initial loan amount is 10 lakh for the first month. What's your EMI? Equals to 33,214. Press enter. Interest equals to loan amount into 12% divided by 12. Press enter. 10,000 you get, okay? So principal repaid is what? Equals to EMI minus interest. Press enter. So your principal repaid is 23,214. So out of 1 lakh, you have cleared 23,214 in the first year. So what is the balance amount of loan? Rather, what is the closing balance of your loan at the end of the first month? How do you compute that? Equals to your beginning loan amount minus principal repaid. Press enter. So at the end of the first month, it will come to 9,76,075.69. I hope it's clear for the first month. Still there are any confusions?
No, ma'am.
Okay. Now I'll go for the second month. Second month, what happens is end loan or the closing loan amount of the first month will become the opening or the beginning loan of the second month. So equals to, take this cell referencing that time. Press enter. Like that you're supposed to work out. You need not type or do anything separately. Okay, then again EMI. Now EMI, what you can do is you can just freeze this EMI cell. Now for every month, instead of taking the cell referencing, what you can do is go back to the first month, 33,214, double click on the same. Okay, it is showing as equals to B5, correct? Just press F4 and freeze your cell only once. How you did for cell referencing, right? In the same way, just use F4 and freeze your B5 cell and press enter. And once you freeze, just hold it and drag it for all the 36 months. Now you tell me, does EMI change for every month? No, we pay the same EMI every month to clear our loan. So instead of taking the cell referencing again and again, we freeze the cell so that we can take the same EMI amount for all the 36 months. So your work becomes easier. Now interest, now don't freeze the interest cell also, because interest will not be the same for every month. So what you're supposed to do for second month interest onwards is equals to, now your opening amount of loan is how much? Opening balance is 9,76,786. So select that cell, into 12% divided by 12. Press enter. So your interest is 9767.86. Principal repaid equals to EMI minus interest. Like this. Again, your end loan should be equals to beginning loan minus principal repaid. Press enter. Like this, you're supposed to work out. Same thing if you do till the 36th month. And 36th month, it has to be here 0 or probably a small, a fractional amount like 15 or 21 rupees. That's fine. But you should not have a huge amount by the end of the last month. So I think you can continue working for the same. You can just finish off this table.
Ma'am,
Is that yes, pa?
can you again repeat with the formula for the interest and the principal paid?
Yes, pa, done. Now interest, what you're supposed to do, I'll do it for the third month. You can just observe it for both interest and principal repaid. See, for third month when I do equals to end loan amount. Press enter. So your third month opening balance is put up here. Now I'll come to the interest calculation equals to this loan amount you're supposed to take, not the 10 lakh, because this is your opening balance now. So equals to beginning amount of the loan into what is the rate of interest? Rate is 12%. So 12% divided by 12, because it is done on a per month basis, right? So divided by 12. Press enter. So you should be able to get interest like this. Principal repaid is equals to EMI minus interest. EMI minus, I've given you a C towards the right hand side. EMI minus interest. Press enter. So this is a principal amount repaid. So end of the loan is equals to beginning amount of your loan minus principal repaid. Press enter. Like this, you're supposed to get it. Is that clear, pa?
Yes, ma'am.
Yeah. So you can just complete this table. I'll put the solution sheet here right on the screen. You can cross check and work simultaneously. So this is the screen I've put here, so you can just cross check. For you only have put it up.
Excuse me, ma'am.
Yes, pa.
Ma'am, could you double click on the EMI end of the period, ma'am, like the calculation?
EMI at the end of the period. EMI
Yes, ma'am.
amount you want.
Can you double click on that, ma'am? Like scroll above.
This one.
Yes, ma'am. Yes, ma'am. Thank you.
But you can just add a minus sign there because you can directly subtract your interest from the EMI. Here when you're putting 10 lakh, 1 second. Yeah. Yes. So I've just shown you. Yes. Here you can add a minus sign. That one addition you can do.
Ma'am, can I just drag the cells and then like complete all the 36 months? Or should I individually type into each and every one to calculate the end loan?
Your words are not clear. It's just mumbling.
Ma'am, do I need to type in each and every month to calculate the end loan, or can I just drag and complete it all at once?
You can just you just drag and experiment it. In case if you are able to get the correct answer, I will leave it
I
to you.
was only able to get for 1 month.
You were able to?
Get only for 1 month, not for all the months.
For how many months you have made the calculation?
I've completed the calculation for 5 months by myself, and then when I dragged it, it's just becoming like dash.
It will not come here because see, I told you, know your fill handle series will not work every time. See why it doesn't work is your beginning amount of the loan changes, your interest calculation mainly changes. So every time you cannot keep on dragging. So a lot of fluctuations will happen.
Oh, I got that. Then I saw your table and it was completed, so I thought maybe you have dragged it and then.
I have not dragged it. If I was dragging it, I would have told you all as well to drag it right. Why will I make you to
Ma'am,
work all 36 months? Yes, pa.
ma'am, I got 0. Yeah,
Super. If you've got 0 for
yeah.
36 months, it's fine.
Yes, ma'am.
Yes. Even if it is a fractional amount, also it's fine. It works out.
And after
See,
some time,
dragging.
you don't need
Yes.
to drag it. After some time, it just recognize the all the
Yes, yes,
format.
yes.
You just
That's what
need
I
to put to
was
as
about
is
to
equal
tell
to
you.
n equal.
Yes,
Yep.
very true. Because that's what I was able to tell, and in between you told me you've got 0. What happens is, see, you have had a calculation of till 36 months. So after completing 3 months, 4 months, or 5 months, if you drag, you won't get the complete answers. You will get for 1 month, again it will be a dash, something else. So if you keep on working out, in between it will automatically calculate, and then it will take till the 36th month your calculation. So in between it will start to auto calculate. Just you do it for 5 months, and for the remaining you drag, you cannot work on that. Fill handle will not work on that basis. You have to keep on calculating in between of your table. It will start to auto calculate all your calculations so far, whatever you have done, because it will try to understand the base. After that, this will happen, and then by the end of 36 months your answer will be 0 or any fractional amount. So until then you have to have patience to calculate this amount and to complete this table.
Ma'am, when I
Yes.
love the columns of end loan and principal amount, like
Huh.
just the columns, I
Huh.
got the answer for like if you drag it in just one, two.
Not bad. I didn't get your point.
In end loan, when we click on the cell,
Huh.
I put it as dollar $B and dollar $E. So at that time, when I drag it, I do get the answer. So like that, if we do it for principal repaid and beginning loan, we'll get the right answer when you directly drag it from the first row itself.
That's what, yeah, that's why I'm able to tell you. See, I want to tell you on one thing. First of all, it is not dollar. You're freezing a cell. You should
Yeah.
not tell it as a dollar sign. You're freezing a cell. Okay, that's the first thing, first correction. The second thing is, see, after 5 months, 6 months, if you drag it, you will not get the answers for the rest of the months. So now EMI calculation, what I did, 33,214 for 1 month you did. Then what I told you, you have to freeze that cell so that for the rest of the cells you get the same EMI amount. Now, if the same concept, if you're using from the first month, you're freezing the calculations and then you're dragging, you may get the same answer. But you do the calculations half and half till the 5th month and then you drag, you won't get the correct answer. So these are the numerous ways of completing your data amortization schedule. Exactly. So that if you freeze, you can complete your table. If you don't freeze, if you drag it, naturally you will not get the correct answers. So I've put up the answers for all the months. You can have a look at it.
Done, ma'am.
Yeah, good. Yes, see if you can observe 36th month will be 0. So which means by the end of 36th month, you have cleared the loan. So you don't have any balance left to be paid to the bank. So you've done with the first case. Please try out debt 2, where I've given as 20,000 as the loan amount. The one of doing the case 1, carry on. This is your case 2. 20,000, 9%, and EMI should be 913.69 paise. So just try it out the same way only. Only the loan amount changes, rate of interest, the period, and the EMI. The working is the same. So please complete your debt 2 sheet if you're finished off with debt 1.
I got zero again.
Very good. So from this table, you are able to experience how the EMI is being calculated and every month how the loan repayment is determined, right? So by the end of 3 years or 5 years, depending upon the period of the loan, how the loan clearance amount is being calculated is what you're going to is what you have learned here in this debt amortization schedule. So I'll just display the case 2 for you. You can just cross check the answers. You can just cross check the answers what you've got for case 2.
Ma'am, can you show me the EMI amount in the beginning?
Yes, sure. This is the EMI amount.
Okay, ma'am. Thank you.
Yes. Are you able to complete this table?
Yes, ma'am.
Still anyone is working out? Okay. So I'll move on to the next set of concepts. I think I've sent the file to you all. You can just download that file. The file is in the name of income statement. Please download that file. Yeah, this is the file which I was talking about. Yes. So have all of you received the file? Yes. So go to the sheet 1 where I've given as the intro for you, a small introduction on the income statement. Yes. Yes. So here we are discussing about the income statement, the role played by the income statement. So what role does income statement play? So income statement is a statement where you determine the net income available to the shareholders of the company. Okay. So this income statement, okay, represents the financial performance of a company. What is the current financial position? How good they're going on, okay, and what is their performance graph. It is also called as the statement of operations and the profit and loss statement. So here, when we are working on the income statement, we calculate the net income or the net profit available to the shareholders of our company. And this is a basic philosophy, okay, for any company, because as we always keep on discussing that profit is the main motive, and to attain that profit in an ethical way, okay, so what all what do you say, activities need to be carried out, what expenses are to be incurred, subject to everything, what is the what do you say, the ultimate goal, that to achieve a reasonable amount of profit. So that is how that is where we're going to work on these income statements. So how do you, what formula works for that? Net income equals to revenue earned minus expenses incurred. Yes. So we go on to the second sheet where we have the sales revenue formula. And I think all of you are aware of it. How do we compute the total revenue generated? It is the total number of units sold into selling price per unit. Okay. So selling price per unit into total number of units sold. So when we multiply these two elements, we get the total sales revenue generated. Okay. So here we have this case 1. And case 1 we have is this, and it's a very simple case which you can do it by yourself, but anyways, I'll explain you. Now for all the 5 years we have given the selling price. Okay, for year 1 the selling price is 250, for year 3 it is 300, for year 3 it is 350, for year 4 400, and for year 5 it is 450. And the volume sold for every year also has been given, so you have to calculate the revenue generated for each year. So how will you do it? Equals to selling price per unit into volume sold, the quantity sold, and press enter. That's all. And just hold and drag it for the rest. So you get the answer. So quickly, 2 minutes, you can just finish off this. So this is how you calculate your revenue generated for each year for 5 years. Yes, are you done with the case 1?
Yes, ma'am.
Now the case 2, you can make a try. See, a tire manufacturer produces totally 10,000 tires. A tire manufacturer produces 10,000 tires across different vehicle segments in the year 2019. And throughout the entire year, out of 10,000 tires manufacturers, he sells 2,000 tires at a price of 200, 4,000 tires at an average price of 450 per tire, and the remaining tires were sold at an average price of 650. What is the total revenue generated for the company? So you can determine this. Yes. So totally out of 10, 2 are sold for 200, 4,000 tires are sold for 450, remaining at the amount of 650.
It's 4 lakh 80,
4 lakh?
80,000.
Yes, it's 4 lakh 80,000. So your net answer should be 4 lakh 80,000. This should be your answer. Not worked out. I'm just giving you the answer. You can easily work out. See, just multiply 2,000 tires into 200 plus 4,000 tires into 450 plus remaining how many? If 6 goes out of 10, remaining 4,000 tires at a price of 650. So sum up all, you should be able to get 4 lakh 80,000 as the total revenue generated from the sale of the tires by the tire manufacturing company. So this is how you're going to do it. This is how you're going to do the calculation. Okay. Yes. Now after this, we go for the case 3. Case 3, what it says. Okay. Now here, coming to case 3, for year 1, the selling price has been given, and for year 1, the total quantity sold also is being given. You have to compute the total revenue generated. After that, your working starts for year 2, year 3, and year 4 and year 5. Now it is expected that the price will increase by 20% and the volume sold will also increase by 30% from the second year onwards. Find the projected revenue. Now for the year 1, there are no changes. It remains the same. 250 is the selling price, 450 is the average price, and 4,000 tires are sold at 650. Able to hear my voice?
Yes, ma'am.
There was some disconnectivity. Yes, pa. So case 2, you're able to get the answer. Did you have any issues in solving case 2?
No, ma'am.
So yeah, good. Now case 3, how can you compute the increase in the selling price and the volume? I want some
Excuse me, ma'am.
answers. Yes, ma'am.
Ma'am, can you go again with the case too? Because I got 48 lakh as an answer.
40 lakh.
48 lakh.
It's right only, 48 lakh only.
It's
So
right.
just
Okay.
it's right. It's 48 lakh only. Okay, it's the right answer.
Thank you, ma'am.
Yeah. Now case 3, I think I've explained you. Now we have a increase in the price and increase in the volume from year 2 onwards. So as per you, how the computation would be done for year 2 onwards? I want the increased selling price and the increased volume. So how I should compute this for year 2 and onwards?
Add 20%. Select the
How?
B cell,
Uh,
B41, and plus 20%.
okay. So as per you, I have to do like equals to B41, then plus 20%.
Yes, ma'am.
But I got the same answer.
Ma'am, select B41 plus
Okay.
250 into 20%.
B41 is nothing but 250, yeah.
Yeah, plus 250 into 20%.
Again plus 250 into 20%.
Yeah.
Okay. Then any other answer? I want to know what are ideas go into your mind to get that to calculate that increase in the price and the quantity sold.
Ma'am,
Hmm.
ma'am,
Yes,
we have to select B41
ma'am.
into open the bracket 1 plus 20%.
Okay. Equals to B41 into 1 plus
1 plus 20%, ma'am.
suppose if I do into 20%, what answer will I get? I'll only get the increased in value. This is the right way of calculating the increase in the value. See, you're right. So equals to B41. B41 is your 250 into 1 plus 20%. So when you press enter, you get the increase in value because instead of going a roundabout way, this is the shortest way. So how do I get it is, see, if I directly do equals to 250 into 20%, I only get the increased in value 50 rupees. But the total increase in the value, the updated value is 250 plus 50, 300. So again I have to do plus 250. So plus 250 or plus B41, I'll be able to get 300 like that. So instead of going in this detailed way, equals to B41 into, open the brackets, 1 plus 20%, close the brackets and press enter. That's all. So for year 2 you do, and for the rest of the years you get the updated value. Okay, the same way goes with the volume, equals to 1000 into 1 plus 30, close the brackets, 1300. Same thing for the rest. And now you can just reduce this decimal. Okay, and now your revenue generated equals to 1000 into 250.
I mean, last time it will be 14 lakh 80602.
Yes. That again? Yes. You can convert it into the final figure. So this should be your calculation. So complete the table.
Ma'am,
Yes, pa.
ma'am, could you show how to calculate the year again, ma'am?
Here, in the sense, the increased value you're
Yeah,
asking.
increased value.
Yeah. Yes. See, I've just elaborated it. Equals to B41, that is 250, into, open the brackets, 1 plus 20%. 20% is the increase in the price. So you're going to put 1 plus 20% and then close the bracket. So you get the updated value, the increased value.
Okay, thank
And
you.
then calculate for year 2 and drag it for the rest.
Thank you, ma'am.
Yeah. Yes, are you done?
Yes, ma'am.
Okay. Right. So the next sheet is a discussion of COGS, nothing but cost of the goods sold. Okay, so what cost do you incur to manufacture a product, to resell a product? Okay, that's how you're going to determine the cost of the goods manufactured, cost of the goods sold. So cost of the goods is the amount it costs to produce or procure a product. Yes. So if I'm a manufacturer, so what all costs I incur to manufacture the product, my primary and my what do you say, administration, secondary expenses, however you define, they all are summed up to determine the total cost of the product. Suppose if I'm not a manufacturer, let's say if I'm a retailer, so what all cost do I incur to purchase a product and then to resell it? So that's how I determine the cost of the goods sold. It is the amount incurred to produce or to procure a product. Produce for a manufacturer, procure nothing but buy or obtain as a distributor or a store owner, nothing but for retail or for online purposes. So how do you compute this cost of the goods sold? Opening stock, beginning inventory, plus the net or the total purchases made during the year minus closing inventory will determine the cost of the goods sold. So here I have a small example. XYZ, a company has a opening inventory of 1 lakh. The net purchases made is 4 lakh 50 and the closing inventory is 35,000. Here is how to find out the cost of goods sold for the XYZ company. It's very easy. So your opening stock is 1 lakh. The net purchases made for the entire year is 4 lakh 50. So we add this 4 lakh 50 to 1 lakh, which is the opening stock. So total comes up to 5 lakh 50 minus closing stock 35,000. So that's how we determine the cost of the goods sold. So here the answer has been given for you. You can observe in this formula bar equals to 1 lakh plus 4 lakh 50,000 minus 35,000, which will come up to 5 lakh 15,000. One second. Yes. Right? So you're able to get this answer 5 lakh 15,000. For case 2, again, we have an example to discuss. See, cost of the goods sold example. We have a shopkeeper who had bought 100 footballs priced at 30 each. So each football costs 30 each. And out of 100 footballs bought, the shopkeeper sold only 10 footballs. And these 10 footballs were sold at a price of 50 each. So 100 footballs are purchased at a price of 30, and out of 100 footballs, 10 footballs were sold at a price of 50 each. Okay, so what is the total cost of the goods sold? So here you have to understand very carefully. The net revenue generated is 500. And how is this 500 generated? Now, what is the total football sold? It is 10, priced at 50. So 50 into 10 becomes your total revenue generated. What is the COGS? So, what is the cost of these 10 footballs? The cost of these 10 footballs is 30 each. That is 300. So your gross profit is revenue minus cost of the goods sold, which is 200. So here what you have to understand, the most important aspect is your COGS. Revenue is very easy to compute. How many footballs are being sold? 10, priced at 50 each. So 10 into 50 is 500. But how do you compute the COGS, cost of the goods sold? Out of 100 footballs, 10 footballs are sold. So what is the cost of these 10 footballs? Cost is 30. So 30 into 10 becomes 300. So 500 minus 300 becomes 200. So the gross profit derived is rupees 200. I hope this example is very clear for all of you. So because why I asked you this is, so this plays a crucial role for you when you understand this one. Okay. And next I come to the gross profit computation, which you can work out. Okay, so as I've told you, your GP is revenue minus COGS. So you can solve the first case study. A mechanic shop reports 15,000 in revenue for the month of April. They spend totally 10,000 on the cost of the goods sold. Find the gross profit. So what's your GP? I think orally only you can tell. What's your GP, gross profit? Equals to
5,000.
5,000. 15,000 minus 10,000. So 5,000 will be your GP. Yeah. Can you just try to solve case 2? Bought 100 books worth 100 rupees per book. Out of 100 books bought, sold how many? 100 books all were sold for rupees 200 per book. Find the COGS and the gross profit. So why don't you do the case 2 and give me the answer?
Gross profit is 10,000.
Yes. So revenue is 100 books are sold, priced at 200 per book. So it is 20,000. Your COGS, how many books were bought? That is not counted. Out of 100 books sold, how many, out of 100 books purchased, how many books were sold? All 100 books. And what is the cost price of these 100 books? The cost price is 100 per book, which is 10,000. So your GP will be equals to 20,000 minus 10, which is 10,000 rupees as the gross profit. Okay. I hope you've got the same answer. Try out the case 3. Here you have 2 cases actually. So if you do with the case 3, we complete the gross profit computation.
Ma'am, the gross profit is 29,000.
29,000.
Yes.
Any other answer?
Ma'am, gross profit 4,000.
4,000. Okay. Yes. Any other answers? I've got 2 answers, 2 different answers.
I got 8,000.
Because I got 8,000.
How much per?
8,000.
8,000. Okay.
Ma'am, I got 4,000.
So you've got different answers from different person here. Super. So let me give you a clarity that which is the right answer. Okay, so I've got so many options as the answers. So let me check it out. See, here we have 2 cases. So clearly you have to understand. First, you have to compute your revenue 1. So what's your revenue
Ma'am,
1?
it's 13,000.
Out of first cases, 13,000. We'll see which is the one. 5,000, 4,000, 13,000, 29,000. So let me see who wins this answer. Okay, right. So out of 100 books bought worth 100 per book, 50 books are sold at a price of 200 per book. So your revenue one has to be 50 books which are sold at a price of 200 per book. So 10,000 is the first revenue. What is the second revenue? Buy 120 books worth 100 per book. Out of 120 books bought, 80 books were sold. Equals to 80 into 200 per book. So 16,000 is the revenue 2. Now, for case 1, what is the COGS? How many books are sold in the case 1? Out of 100 books bought, 50 books are sold. Correct. So, equals to 50 into what is the cost price of these 50 books sold? It is 100 per book. So, it is 5,000. In the case 2 again, what is the COGS? Out of 120 books bought, 80 books are sold. So what is the cost price of these 80 books? 200 per book. See, to be frank, all these exercises seem to be very simple. They are simple actually, but how you understand matters here. Your English matters here, because if you understand the language, 50% of your problem is solved. It can be your anything, any subject for that matter. English matters the most, how you understand your language, because it can create confusions, it can give you a clarity, depends upon your perspective. Okay, so this is the case. So 80 into 100 was okay, so
Ma'am,
COG,
for
see,
the
one second, one second.
COGS, it would be
Yeah,
100.
yes,
Yes.
pa. So it is 8,000, correct. Now what happens is, what's your gross profit? Now in the case 1, your revenue is 10, your COGS is 5. So sales minus cost of goods sold is your GP1. So 10,000 minus 5 equals to 5. Plus case 2, 16,000 revenue 2 minus COGS 2 is how much? It is 8. So who gave me the right answer as 13? They are the winners.
13,000. Yes.
Yes. This is the right answer. So carefully you have to solve it without getting confused. So if you've done the mistake, you can just rectify it now.
Ma'am, for COGS, what amounts do we have to take, ma'am? Can you tell that again?
COGS is the cost price pass here. In the first case, see, 50 out of 100 books, 50 books are being sold, right? So what is the cost price of these 50 books? It is 100 per book. That is your COGS. 200 per book is your selling price. But at what price did you purchase this book? It was 100 rupees for one book. So that becomes your COGS 150 into 100.
Okay.
Yeah. Yes, are you able to solve this? Done with this calculation?
Yes.
Yes, ma'am.
Fine. Fine. So your next sheet is your P&L 1. So now I'm not going to start because it's already time. It's just 3 minutes for your class to end. It's a very simple thing, ma. See here, we are going to prepare a multi-step income statement for the company. Okay, Apple Company, which is a clothing retailer. Okay, for the year ending as usual December 31st. Now here you have to structure this in this table very carefully, and you have to arrive at your profit after tax. Okay, so here also, if you observe, so here the calculation has also been given to help you out to find out, but before that you have to work it individually. So structure also I've given, but please do work it, because if you copy paste it or if you just see, it doesn't make any sense. If you work out individually, it'll help you to work out your P&L too, and very very important, it will help you to solve your upcoming case studies in your financial modeling, because this is your building block actually, a very important step to arrive at the profit after tax. Okay, earnings available to the equity shareholders. So kindly go through this case, okay, and you solve it out individually, and then you cross check with the answers. I'm going to do it in the next class. If you can make a try. Otherwise, anyways, I'm doing it off in the next class. But please don't see the solution and then arrive at the calculation. It'll be the wrong way to work out. So it's my suggestion, personal suggestion, kindly do it by yourself voluntarily. Make a try. If you cannot also, it's fine. Anyways, I'm going to take up tomorrow. No harm. If you want to, make a try. But don't see the answer, then make a try. You make a try and then you cross check with the answers. Because it's a important learning step for you with this table. So that one I'm going to promise, because your case studies which you're starting after a couple of classes, maybe next week or this week, so that time you want to understand the importance of this multi-step income statement. Okay, so I'll not start with this. We'll be starting off in the next class. Now, if you have any doubts, anything with regard to this class, you can just ask me.
No,
I can solve it up. Yes, pa.
no, ma'am.
So everything is clear till now. All
Yes,
your
ma'am.
income is very good. Okay, so what we are going to do is, in the next class we're going to close off this P&L 1 and P&L 2. Okay, and then again we're going to start off with some new concepts in the next class. So until then, keep your practice going on, and see you off in the next class. Thank you all.
Thank you,
Thank you,
ma'am.
ma'am.
Ma'am,
Yes, pa.